Mirae Asset Mutual Fund. Ankit, good afternoon. Good to have you with us here. Thanks for joining us. Prashant this side. It's a tough-looking screen, Ankit, across the board, right? I mean, lately, and especially if you're tracking things day to day, it is. It has been, I mean, a few wins along the way. What do you suspect is happening? And is the market once again kind of trying to, discount out the possibility of this US-India deal? Who knows when it happens? But every now and then you get this euphoric thing that, well, it's very close, and then it doesn't happen, and then the market kind of sort of gets disappointed.
Hi. No, Prashant, you are absolutely right. If you look into market, has seen a pretty good consolidation last 15 months. Last 15, 20 days also there has been a bit of a volatility. But it is last 15 months, if we try to look into it, is around concerns around growth slowdown, given tight liquidity environment, lower capex, and peak rural consumption. And also, if you look into the starting point of valuation, sometimes, let's say last year itself was very expensive, particularly in mid and small cap space, because it was trading at 40-50% premium to historical average, and that too on an optimistic earnings assumptions as such. But as things stand, if you look into most of these factors are seeing an improvement. And a large amount of this is to do with significant policy impetus we have seen both around fiscal as well as monetary. Fiscal side, if you look into almost $35 billion relief has come by way of GST 2.0 and direct tax cut. And on the monetary side, also significant heavy lifting has been done, right? Almost 100 bips rate cut and $70-80 billion liquidity infusion through CRR cut and all. So this is clearly now reflecting in a brief cycle of earning downgrade, which we have seen over the last 4 to 5 quarters. This is coming to an end as per our view. And we do see earnings growth trajectory to actually improve from mid-single digit, which has been the trajectory last 3-4 quarters, to strong double digit going forward. And even if you look into, in this context, the quarter gone by, we saw a pretty decent earnings sort of a delivery. If you look into NSE 500 index, there has been almost 15% earnings growth. And even on the top line side, there has been a good jump from 6-9% reach to, to almost 8 to 9 odd percent. And if you exclude financials and all, growth is even looking bit better. So I will say that whatever factors which has impacted market to consolidate last 15-18 months, I think we are seeing a pretty good progress on most of those counts. And even additional point being that valuations are now relatively more attractive. If you look into large cap, mid cap, whichever way, the valuations are now in the range of 10-15% premium versus historical average. So to that extent, I think we are quite constructive on the market at this point in time.
All right, Ankit.
On your point around, just to conclude on your point around this trade deal and all. I mean, difficult to pinpoint the timelines and all, but definitely India at this point in time confronts the highest effective US tariff rate at 34%. And while overall US goods export quantum is relatively low at around 1.5-2% of GDP, but this is also one of the fastest growing geography before the tariff coming into the picture. So to that extent, needs to be seen, but hopefully, let's see, maybe a couple of months down the line, we might hear something on this count. But clearly, as a result of this, we have seen FI outflow has been very, very high. And that is also partly one of the reason why actually markets are consolidating despite of incremental earnings downgrade coming down.
All right. Hi, Ankit. Good afternoon. Good to see you. And I agree on that point on the headline index. But if you tell someone, the fact of the matter is after many, many months, the Indian markets have outperformed the globe, which is a very, very encouraging sign. But if you tell someone about this, they'll be like, what are you talking about? Look at the month of November. The small cap index, I think, is down close to around 4%. And stocks are down 10, 15, 20% as well. So you would not be worried with the kind of selling that you see in the broader markets? Would you attribute it just to lightening of positions towards the end of the year? Maybe some large HNIs as well, taking some money off the table? Because last few days has been a little bit worrying, I think, on that front. Your comment?
Yeah, Nigel, I mean, in the short term, I mean, there might always be this sort of a disconnect where they're actually small cap and mid cap underperforming meaningfully to that of large cap. But if I look into bit of a medium term, I mean, sort of a picture, mid cap and small cap is one space where earnings compounding potential remains far higher. And we have seen at any time frame on rolling basis, the earnings compounding can be pretty healthy at around uh, uh, mid-teens level, right? So to that extent, I will not be worried. Yes, I mean, near term, there might be different factors at play. But having said that, even if you look into bit more medium term basis, some of this space has done exceedingly well, right? I mean, despite of consistent earnings downgrade over last 15, 18 months, Indian market has held up reasonably well, I will say. Yes, I mean, try to compare globally, we might have underperformed, but there is right reason behind it of the starting valuations being high. But I will say at this point in time, most of the factors are looking in our favor, and we are quite constructive. No,
Right. What is the top sector, Ankit, you would bet on then? We have gone through a time-wise correction on the headline index. As you're saying, you're still constructive. You believe market is going through phases, but that's par for the course. Ultimately, earnings will be the driver. So if you had to tell me the top two sectors that you're bullish on, which one would it be?
Yeah, so if you look into, we are quite constructive on large private sector banks because there we are clearly seeing earnings, in fact, tracking relatively better than the expectation, and valuations are reasonable. I mean, in fact, is trading at bit of a discount or maybe average in the historical context. Second, we are quite constructive on the pharmaceutical side of it, which includes CRO and CDMO, contract manufacturing as a space. So no, I will, and third might be, let's say, industrial, consumable as such. So these three pockets we will be quite constructive upon.
Ankit, on technology, I was reading some notes. Today Motilal Oswal came up with a note, and they've turned bullish. But even in their bullish argument, they're saying that by FY28, which is when we see enterprise-wide AI adoption, the industry growth rates are only going to be 8 to 9%. So if the key driver for picking stocks now is going to be earnings, now tech companies are not going to give you double-digit, earnings. Some mid-cap companies, of course, have been and will continue to do that. But on a broader scale, tech, even 3 years down the line, perhaps is going to give you high single-digit kind of return. So then where do you stand on tech? Or do you think the valuations make it compelling enough to look into the sector?
Yeah, no, so IT sector, yes, I mean, it has sort of underperformed, but for the right reason, again, because given the AI is sort of a disruption, while, I mean, clearly will be deflationary for the sector as such. And to that extent, growth profile, any which way, given Indian IT services market share in global IT spending has already base growth profile as any which way sort of a coming off. And in that context, yes, I mean, currently sector growth is tracking maybe for large caps, maybe at around low single digit, which might improve to mid single digit going forward. And in that context, yes, I mean, 4-5% sort of a free cash flow yield do act as a floor. But having said that, I mean, until and unless, I mean, the growth visibility improves to high single digit, it becomes very difficult to make a very significant overweight stance on the sector.
Ankit, thank you very much for joining in. Prashant, when I met NTT, the Japanese company, and they said that they're already seeing 50% productivity in the software development cycle on account of AI.
Increase.
Yes, a 50% productivity benefit or increase, not a cost reduction, a productivity increase on account of AI in the software, the entire software development, not just coding, but the entire segment. And they're saying in 2 years that number will be 70%. And that's quite, sizable in terms of, productivity benefits. And the question is this going to be deflationary?
No, this is per capita productivity. I mean,
per person.
So then basically you need lesser people.
I asked them, I said, does that mean that, you are involving fewer people in coding? And I think we'll play out that interview tomorrow. But again, I don't think any company is going to come out and say that, yeah, now we'll, hire 70% fewer people. But he says, no, there's work. So, we continue to hire and we need people. But there is productivity benefit and it's quantifiable.
You need people, but I think it's much lesser, right?
That's what I asked him. But but I was just surprised by the number. 50%, I think it's quite incredible.
Okay, well, let's move